Good day, and thank you for taking time to listen to the STANLIB Fixed Income team's views on the budget. We think Treasury once again delivered a solid budget, which was largely in line with market expectations. Debt consolidation is very much underway, with Treasury confirming that debt has peaked this year at just under 79% of GDP, which is 1% higher than they expected in the MTBPS last year. We think the main reason for this miss was that Treasury overfunded themselves last year, given the high demand for South African government bonds, which is a good space to be. They are still showing improving primary budget surpluses over the coming years, although we think they are being conservative with their deficit expectations, and this will see better revisions in the MTBPS later this year. Revenue overruns were about 29 billion rand in the 2025-2026 fiscal year, largely due to higher corporate income taxes, and this ensured that they scrapped the planned 20 billion rand tax hike this year, giving consumers some relief. More importantly for the bond markets, they reduced their long-term local debt funding by about 140 billion rand in the next fiscal year, as they had spent 67 billion rand more cash than planned. This gave them space to cut the weekly issuance of the nominal bonds by 450 million rand to 2.55 billion a week. The market did not expect this quantum of issuance cuts and responded positively to it, with long-end bond yields ending the day almost 20 basis points stronger. The last time this weekly issuance was at these levels was back in 2018, when debt to GDP was around 50%. And we think this adds credence to Treasury's forecast of debt to GDP dipping below 70% over the next 6 years. And we expect rating agencies to receive this budget positively and likely upgrade South Africa's credit ratings later this year. As a result, we think this is very supportive for the rand and bonds, and we still expect to see another 50 basis points rally in bond yields this year with a flatter yield curve. Thank you.
STANLIB Asset Management Pty Limited is an authorised financial services provider in terms of the FAIS Act. This podcast should not be construed as advice.